Hello and welcome back to Robinhood Stock Market Watchlist. My name is Carlos. I'm the creator and administrator of our Facebook group. And today is Sunday, April 10th. And today is our meeting training day. So we're going to go over, we always go over kind of an educational feature at first, and then we go over into looking ahead into next week. That way we can kind of plan some trades. So that way we can trade our plan. So first things first, educational. I wanted to pull up a image that is really important. This is the differences in between an amateur trader and a professional trader. So it's extremely important to know the difference between the two, because it's kind of like knowing the difference between right and wrong. You know, you don't know unless you're taught. You know, and so an amateur trader will often let losers run and hope that they turn around because they're using the hope system. And a lot of times you'll see that I'll mention that in a lot of our other meetings or our chat rooms and stuff. And so you just don't want to just throw money at something and hope that it sticks. We got to have a logical reason for the things that we do based on the tools and strategies that are available. So professional traders will cut losers when a stop is reached and a trade idea becomes invalid. In a lot of our training videos, we've talked about patterns that help predict which direction the stock price is going to go, as well as the moving averages. That is part of a system that it helps us provide us these buying and selling signals. So it lets us know when to get in, when to get out, or when a stop is reached or a trade idea is invalid. So amateur traders will close winners too early because of fear of giving back profits. Because maybe they got beat up in the last several weeks in the stock market, and now things may be starting to turn, and they're all of a sudden they decide to sell because of the fear of maybe losing what profits that they just gained, and then all of a sudden the stock just surges and they're just like, why did I sell? Well, they didn't have a structured system that can help provide them these signals. Where professional traders will let winners run until a profit order or when a clear signs are given to exit. Trust their system. The moving averages and the patterns is our system that we have to trust and rely on. It just depends on your style in trading and investing. You may have to configure your moving averages settings accordingly to that. That way it's perfect based on your system. So amateur traders will change their trading system after a few losing trades because they just don't know what to do. They're just trying different things and trying to figure something out. And sometimes they will feel like that they are, when really maybe we're just entering the bullish season and things are just kind of starting to go up anyways, and they think whatever that they're doing is working. But eventually the that time runs out and the stock market system begins to turn the other direction, and then they're like, oh, I don't know what to do. So a professional trader must be able to adapt to different characteristics that the stock market provides, whether it's bullish or bearish, or if it's just kind of flat. There's a lot of ways to make a lot of gains from every single scenario. But professional traders stick to their rules religiously and think process oriented. Not only do they think process oriented, but really strategically. And you just have to keep the emotions out, because the emotions, or even greed, which is part of your emotions, can affect your buying and selling decisions. Amateur traders will close their trades and never look at them and avoid a learning effect. And you always want to be able to learn from your mistakes, as well as maybe from other people's mistakes. That way you don't make the same ones. Or a professional trader will analyze their past performance, keep a trading journal, and learn from their past behavior. That's extremely, very, very important. And then amateur traders will overtrade and or even revenge trade and hope to make a lot of money fast. There's nothing wrong with making a lot of money fast. It's just we got to do it the right way, and do not rely on the hope system, and to definitely keep our emotions out. Professional traders are aware of their emotional impacts and know how to identify and manage their impulsive buying and selling decisions. Amateur traders will open their trading platform and then desperately try to find random trades. A lot of times you also find, people on social media, hey, I got $1,000 or $10,000, what should I put it on? Which is, nothing wrong with that, but you just definitely don't want to be, desperate and just try to, throw money just on anything. We just got to have a logical reason, which is something that we're going to go into next here in just a little bit, where professional traders keep a trading plan and plan their trading day ahead. Follow a structured approach. And that's what leads us into the next thing. This is something we do every single weekend because it is a structured approach that I have developed, and I'm sure that other professional traders have developed the same thing, because the thing that we go into next has a huge impact on the stock market. And what that is economic reports. Economic reports have a huge impact on the entire stock market system. So if that is one of the most important things to know, it's just you just have to learn how to pull that information, and that'll lead us into the next thing. So I'm going to pull up our web browser here. And there's a website and an app you can download in your app store called Investingcom. I use it a lot for the US futures. When it becomes available, it's live, so it updates every second. Or most other websites, you look at US futures and it updates like every 15 minutes, 30 minutes, every hour or something like that. So there's definitely a huge delay. And when it comes to the stock market, every second counts. Time is money. And we need as much information to be able to receive when it's available and not waiting. So with the Investing.com website, there's a couple links here. We need the economic calendar. If you're on the mobile application, it should be a little calendar icon on the bottom of your screen. You'll need to click on that, and it'll give you some choices to choose between your economic calendar: holidays, earnings, dividends, splits, and yada yada. So when we scroll down, we need to click on the filters icon, whether it be on the website or on the mobile application. If it's on the mobile application, it'll look like a little funnel, little icon. You just click on that. A bunch of things will pop up. We just need to clear everything because there's only two things that we need to see. And that is put a check mark under the United States, and then under importance, you'll see 1 star, 2 stars, and 3 stars. We need to put a check mark under 3 stars because we want to basically see everything that'll have the biggest impact on the United States stock market for this week. So we'll click apply, get that to refresh, and then we'll click on this week. That way we'll pull everything up. Now, this is highly, highly effective. However, there could be international news that are a lot more severe that could easily interfere with this. And typically that does happen maybe one day out of the week. It did happen last week where the international news was just too severe that it just kind of overpowered the effect that the US economic report had. And so, and that was, I think, like Thursday. I mean, we had great unemployment report, but the international news was just too severe that it just created too much bearish characteristics. And so, so what we're seeing here is every economic report that'll have a big impact on the United States stock market for this coming week. And so it is important that we look at this during the weekend, but it's also important that we look at this every day throughout the week, because they may throw in an unexpected economic report, or maybe there's a forecast like the crude oil inventory levels that don't have a forecast yet. And it may later on this evening or definitely tomorrow morning before the stock market opens. So I think they're just in the middle of trying to figure it out right now. But so looking at the beginning of the week, obviously there's nothing Monday. So Monday is kind of like a wild card. We just don't know what exactly it's going to be. But typically with the characteristics of things. Usually investors on a Friday are very skittish about investing and holding throughout the weekend, so a lot will kind of sell and not hold, and kind of see what the weekend's going to be like and see what Monday morning is going to be like. That way they can kind of plan based on that, whether they need to, whatever. And so but typically that's the thing. A lot of investors like to get back in on Monday morning. They like to start kind of pumping stocks up as long as there's really no bad significant news throughout the weekend. I haven't really seen anything major, and so I think we're good so far. And so so Monday could be bullish. It just depends later on this evening, because sometimes governments or politicians will begin to manipulate things, or the media, and so they may want to manipulate things in a bullish way or a bearish way. So we always have to pay attention to manipulation, because it can be very effective with the stock towards the stock market. And so Tuesday we have the core CPI for the month over month for the month of March. And so, but just know that the more rare that the economic report is, the more of an impact it's going to have on the stock market. So if it's a yearly report, like we usually have during the first quarter, which is now over, it'll have a very severe impact on the stock market, which is one of the reasons why we had a lot of volatility throughout the first quarter. But if it's a quarterly economic report, it'll have a pretty strong economic or impact on the stock market, as well as a monthly economic report. But there are weekly economic reports like the crude oil inventory levels, unemployment, and things like that. So those do play a decent impact on the stock market, but not as much as a monthly, quarterly, or a yearly. So it's important to know the times of things, because of how the stock market can react to things. And so you have to know what time the stock market opens based on your time zone, because when you look at this on the website, it's going to be based on the East Coast time. If you're looking at this on your mobile device, such as your mobile app, or on your tablet or your phone, it's going to pull your time zone automatically and put that in there for you. So that'll be based on your time zone. But if it's on the website, so just know that this report is scheduled to be released 1 hour before the stock market opens. So that means it's going to affect pre-market. So there's going to be a lot of volatility during the pre-market. And if you're not sure what the core CPI is, now eventually if you start looking at this regularly, you're going to remember this stuff and what they are, what it means, and yada yada, in a very short period of time. Give it month, several months, or whatever. I've been doing this for years, and so it's just kind of natural now. But a core CPI, if you don't know what that is, you can click on it. A new page or tab will appear, and it'll give you a very brief description of what it is and how it'll affect the stock market. So for example, the CPI, which is the core consumer price index, that measures the changes in the price of the goods and services, excluding food and energy though. The CPI measures price change from the perspective of the consumer. It is a key way to measure the changes in purchasing trends and inflation. Now keep in mind, inflation is a bullish characteristic for the stock market. If you try to take the inflation away, that's a bearish characteristic for the stock market. So a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar. So going back here, now the previous report was reported at 0.5%. The forecast is 0.5%. More. So most likely it's probably going to be higher than that, really. Inflation, I mean, come on. Inflation is through the roof. And so so this will be interesting. If it meets or beats it, we're good. And so if it doesn't, then obviously, just like the description says, we need to expect bearish characteristics. However, if the morning the pre-market starts and it is bullish, most investors are going to anticipate that it's going to beat it, and the rest of the day is going to be very bullish. If the morning starts off bearish, then they're most likely anticipating that this, isn't going to beat it, and the stock market could go. So this really could have an effect on the entire day on Tuesday, unless there's international news that can kind of play along with the rest of the activity for that day. But I would say so far Tuesday is looking pretty bullish, but to be determined. I mean, we're right, there they could have the bar set pretty low and it's going to be high anyways. That would provide even more bullish characteristics. So I'd say I am bullish on Tuesday for sure. Going into Wednesday, April 13th, we have the PPI report month over month for the month of March, also scheduled 1 hour before the stock market opens. So definitely looks like a lot of volatility on Wednesday, because we have the pre-market activity. So PPI report, if you're not sure what that means, that is going to be the producer price index that measures the change in the price of goods sold by the manufacturers. It is a leading indicator of the consumer price inflation, which accounts for the majority of the overall inflation. So a higher than expected reading should be taken as a positive or bullish for the US dollar or the stock market, while a lower than expected reading should be taken as a negative or bearish for the US dollar or the stock market. And so same thing, and obviously the forecast is saying that they definitely anticipate that it's going to be higher than the previous. I mean, who are we kidding? We're talking about inflation here. Inflation is what, up like 30% overall since the beginning or after the shutdown. And so, but as long as it can meet or beat the previous report, we should be fine. If it meets or beats that, we're even better. And so, so I'd say I'm pretty bullish on Wednesday as well. Now, every day when the stock market opens, the first hour and the last hour of the stock market day is the most volatile time. And so you can kind of see what's going on here. And the government and all these guys, they do this on purpose. And so so the stock market in East Coast time Eastern time starts at 9:30. So we have the PPI report that's building up a lot of volatility, and then you have the stock market opens, and then boom, you got more volatility for the next hour. And after that first hour, usually things start to kind of mellow. Well, boom, we got another crude oil inventory report to keep that momentum going. So we got three things that start off a massive amount of volatility. Now, we don't have a forecast yet for that. And however, the previous report, the oil inventory levels shot up extremely high. Oil inventory levels are one of the things that we need down. If it's lower, even if it's in the negatives, that provides a bearish characteristics. If it's in the positive, that's going to provide, if it's in the negatives, it'll provide bullish characteristics. If it's in the positive, like it is, it'll provide bearish characteristics. So we need them in the negatives. That way it can provide that. And so 2 weeks ago, it was in the negatives, which was good. Last week, it shot up a lot because gas prices are crazy. I mean, in California, it's what, $6.99 a gallon, and I mean, it's just nuts all over the place. And so people aren't driving as much, and so these reports are a little volatile. 1 week they'll be up, the next week they'll be down, and that's where I anticipate this week's report is going to be. It should be in the negatives. So I believe that this is going to create more bullish characteristics because the crude oil inventory levels are going to be much lower than last week. So we should keep the bullish characteristics. So far, I'd say this week is looking good. Monday, Tuesday, Wednesday, bullish, bullish, bullish. Thursday, so let's go into Thursday. All three economic reports are scheduled to hit all at once at 1 hour before the stock market opens. that is going to create a massive amount of volatility when the stock market opens for sure. So let's take a dive into these. We have basically we have our unemployment report and we have our retail sales reports for the month of March. And so one of them is basically for goods, food, whatever, vehicles, things like that. But it's nice that they're doing it all at once rather than separate. And so the previous month, so the month of February was down a lot, both of them, 0.2%, 0.3%, not really down, but they were low. And so, going into March, it's anticipated that they're going to be higher. They're going to be much higher than before. Unemployment rate is a lot less than before. And so, but then again, inflation could be the killer of this. The retail sales could be a lot lower than the forecast, and because I don't think people are just buying as much, and so they may have the bar set pretty high on these reports. But then again, these are pretty low numbers anyways. So, but it was pretty crazy how low retail sales have been lately. So so this will be kind of interesting. So, however, also the unemployment report was significantly low last week. I mean, that dropped a lot. Previous report was like 200,000 or something. Let me see here. We click on it. I believe it does tell us the previous report. Yeah, well, it's forecast previous. But it was a lot higher. And I mean, we were just around 200,000 just a week or 2 weeks ago. And so, and when it goes pretty high, just like the crude oil inventory levels, we should see a bounce. And so we should see a bounce up just like this. And when you see these types of clues, it's higher than the previous report. They're kind of telling you, hey, this days might be bearish, just like Wednesday. The government and all that, they're providing us a clue that, hey, this day is going to be bullish, and so that's our clue. That's the clue that we're given by the system. And so Thursday, just be careful, because Thursday could be bearish. We have 3 great days starting in the month, and then Thursday is now also our Friday. Friday is it's a holiday. I'll have to verify if it's closed. We may be in a 5-day holidays, so we'll have to confirm that. But yeah, so just know that Friday could be closed. I'll have to verify that. If that is, usually holiday weekends are a little weird, but Thursday could be our Friday where people will sell, especially right before close, because they don't want to hold throughout a 3-day weekend, especially a 3-day weekend, because a lot can happen, a lot more can happen, especially with the war and with Ukraine and Russia and whatnot. And so investors are scared of that, and anytime they feel that there's a risk of a World War III, then they'll sell. And so the next thing that has an impact on the stock market, but not so much the stock market, but different segments in stocks, are going to be the earnings report that we're going to have this week. Now, every Saturday I will post the top 10 earnings report and kind of their schedule, right here. So we got Monday before open, after close, and so on. And so they're listed right here. Anticipated earning release scheduled for this week are JP Morgan Chase, Carmax, Taiwan Semiconductor, Delta Airlines, Wells Fargo, BlackRock, Bed Bath & Beyond, Goldman Sachs, and Citigroup and Albertsons. And so, and then shortly after that, I'll display the top 10s analysis. And so JP Morgan Chase is scheduled to release their earnings report Wednesday morning before the stock market opens. The company's earnings release has a 51% expecting an earnings beat, where option traders are pricing in around less than a 3% movement. Not very much, but just know, I'm going to throw something out there. The stock market has a yearly cycle, and it has a 10-year cycle. So, but the yearly cycle, you know, where the winter time's the bearish season of the year, the summertime is the bullish season of the year. In between, like the spring and the fall, are the transitional periods, which is what we're in now. The transitional periods is usually where we'll see kind of a 50-50 blend, or maybe 60-40 blend of bearish and bullish characteristics, where the fall season, or not, I mean, not the fall, the winter season, we'll see kind of more 80% bearish characteristics, 20% bullish characteristics. Where this summertime is the opposite, where we'll see 80% bullish characteristics and 20% bearish characteristics. It just does that year after year. However, the 10-year cycles where we'll see something catastrophic happens, like the whole shutdown thing that was, you know, that had happened, and then 10 years before that was the housing collapse and the bailout for the automotive industry, and then before that was the, you know, Twin Towers, and then before that was the you know, the wars in Iraq that had started, and before that was the Berlin Wall, and so on and so on. And so you know, every 10 years, you know, the stock market has a massive catastrophic dip, but good news can, or bad news can be great news. It just depends on how you utilize it. However, during that 10-year cycle, every, like in between, well, every 2 years in there, different segments of the industries have their time to shine. So like we had, you know, technology, you know, a while ago that had, you know, had a great run for a couple of years, and now it's the energy season and everything. So now energy and oil and whatnot have basically reached their peak, and so if things are really high with that. Now, what is the next one that we're going into right after the energy season is done? We are going into the bank season for the next 2 years. And so the reason why that is because the government is starting to increase interest rates. They start increasing interest rates, banks make more money. And so that means that it is for the long-term and maybe short-term investors, it's time to buy into banks. And so they may not be very profitable right now, like JP Morgan and Chase are one of the preferred banks to invest in next to Bank of America. But right now, we're going to see a lot of low percentages. And they may plunge a little bit, but that is, like I said, bad news can be great news. Just depends on how you take and utilize this information and how, you know, things happen. But I promise you, though, that when here in the near future, when we start getting other earnings reports from these banks and whatnot, that after they start increasing their interest rates, they're growing, their growth, and investors love that, because when a company grows, their stock market or their share value grows. And so, and some of these may still provide dividends. So not only are you holding on to something that's appreciating, but if they pay a dividend, they're going to pay you a dividend every 3 months that you can use for cash, or you can use to reinvest into more stocks, whether it be that same one or different ones. And so just know that we are going into the bank season now and for the next 2 years. So we're going to see a lot of you know, this type of information. So going into the next one, so that was JP Morgan. Next one, most anticipated release earnings is going to be Carmax. Carmax is scheduled to release their earnings report on Tuesday morning, April 12th. The company's earnings release has a 77% expecting an earnings beat. Now, the car business and the home buying, selling, you know, real estate is still very strong. As we're talking about, the government wants to, and banks are increasing interest rates as we speak. People are trying to buy cars and houses before that happens. And so this is, you know, sales well, sales may be up or down in different places, but the revenue is up no matter where you are. And so this 77% is really, really good. Normally for these, 65% is around average. Any more than 65% is anticipated or is expected to be above average. If it's any lower than 65%, that is considered to be below average. So definitely Carmax is definitely above average, so very, very good. Option traders are pricing in around a 7% price movement on either direction. So that is very volatile. So definitely this is something I think we're going to be keeping on our watch list, and we may see some unusual trading activity on it. So we'll have to kind of pay attention to see what tomorrow, Monday, April 11th, is going to look like. So the next one is going to be Taiwan Semiconductor manufacturing. That is huge. As we're experiencing a microchip shortage, Taiwan Semiconductor produces the most microchips in any company in the world, and they are expected to release their earnings report on Thursday morning before the stock market opens. The company's earning release has an 80% expecting an earnings beat, which is huge. In fact, this is the highest percentage than any other earnings scheduled this week. And so, however, just keep in mind, though, you still have to mine rare earth materials and things like that to produce the microchips. If you don't have stuff, you can't make stuff. And so that's really, really important to know. But 80%, that is almost telling me that investors are certain that this stock is going to beat their earnings, because that's pretty high. That is way above average, and 80% is almost something you don't see ever that high. That's like 4 out of 5 odds this thing's going to do it. So option traders are pricing in around 3 to 4% price movement in either direction. And so I wish it was more, but you know, as a lottery play, you can always buy calls on this. 80%, you know, that's very, very good. And that way, you know, maybe you can profit a little bit from a little movement, you know, buying a call or something. And so going into the next one, take a look here, is Delta Airlines. Delta Airlines has confirmed to release their earnings report on Wednesday morning, April 13th. The company's release earnings has a 66% expecting an earnings beat. That's like 2 out of 3 odds this thing may beat their earnings. And but option traders are pricing in around a 4% price movement in either direction. So we'll have to see what that'll look like. You know, a lot of people have been flying lately, but you know, we also have a pilot shortage. A lot of pilots have been retiring, and or maybe they had the vaccination mandate. A lot of them retired really early. However, I do know that the airline industry is trying to recruit pilots from out of the military, and so that's very interesting. So anyways, Wells Fargo is next. Wells Fargo is confirmed to release their earnings report on Thursday, April 14th. The company's earning release has a 69% expecting an earnings beat. Option traders are pricing in around 3 to 4% price movement. Next one is BlackRock. Now, I always like to post some clues in this, in some of these, unless in case you don't know anything about the company BlackRock. I mean, it's like, how can you determine what a company is by that name? But look at the image, BlackRock, making a killing on killing. They are like an investment company or something. They really invest in a lot of you know, war-related stuff, you know, Boeing defense and whatnot. I mean, oil and whatnot. I mean, that's what they really like to, you know, go for, and they're one of the defense stocks and whatnot. And so BlackRock is scheduled to release their earnings report on Wednesday morning before the stock market opens. The company's release earning has a 63% expecting an earnings beat, which is just right around average. Option traders are pricing in around a 2% price movement, so not a very big movement at all. But still, the media is going to be really watching this closely because of what we're looking at here. And so let's go take a look at these other ones. Bed Bath & Beyond has shown some unusual activity in the last week. Bed Bath & Beyond is confirmed to release their earnings report Wednesday morning before the stock market opens. The company's earnings release has a 48% expecting an earnings beat, which is way below average. Not good for Bed Bath & Beyond. However, option traders are pricing in around a 10% price movement in either direction, which is looking pretty good for straddling. And so if you don't know what straddling is, only because maybe you're not very familiar with options, you have calls and you have puts. Call is to bet a stock goes up. A put is to bet against the stock, betting it goes down, which is phenomenal. To be able to bet against a stock, and if it goes down, your account goes up. So I always tell everyone, when it comes to straddling, you can only lose what you put on one side, but your gains have the potential to be unlimited on the other side. So if you know that there's going to be a big movement on something like this is a scenario where you could lose 100% on one side, but you have the potential to gain 200% or 500% or 1,000% on the other end. So if you have 500% gain on one side and maybe lost 100% on the other side, that gain, that huge massive gain, washes out the loss on your other side and still puts you ahead. You can still have your cake and get to eat it too. So why not straddle even on a daily basis? That is something that I do every single day, and which we'll get more into here in just a little bit. But this is a great straddling scenario, because we always want to try to find something that's going to be volatile, because the more volatile that it's going to be, the more it's going to be in your favor when it comes to straddling. So we'll go into the next one here. And these are all saved in our featured area in our Facebook group. So these are really, really accessible to you. These are premium information, highly valuable information that we provide for you guys for being a member of our free stock market group. So Goldman Sachs is confirmed to release their earnings report Thursday morning before the stock market opens. The company's earnings release has a 53% expecting an earnings beat, which is terrible. The option traders are pricing in around a 3% price movement. Not a very big mover, but it's a big company and it will definitely be on the news. And so we'll just kind of have to keep an eye on it for volatility. Citibank is scheduled to release their earnings report Thursday morning before the stock market opens. The company's earnings release has a 54% expecting an earnings beat, which is also terrible. But like I said, we're going into bank season. Hopefully these stocks miss their earnings and they plunge to a new low, but I believe these will probably be the lowest price that they will be for the rest of the year. So this will help provide you a great low cost getting into the bank season. So option traders are pricing in around a 4.5% price movement in either direction. So that is that's pretty good. Go on to the next one here. Albertsons is our last one. Albertsons is scheduled to release their earnings report on Tuesday morning before the stock market opens. The company's earnings release has a 62% expecting an earnings beat. Option traders are pricing in around a 5.5% on the price movement either direction. Now, again, the picture can say 1,000 words, and so a lot of people may not know what Albertsons is, but I'm sure you know what one of these companies are, because they're probably all over the country. Now, I live in the Northwest. We have Albertsons and Safeway, where down in the Southwest, usually it's Vons and maybe some of these other ones. So, but Albertsons is a huge company, and and Hagen's is another one we'll see here on the West Coast. These are grocery stores. People have to, eat, whatnot. But, the inflation, again, could also hinder these types of earnings reports because maybe people aren't buying as much food. But then again, inflation has created these retail companies more profit. And so we'll have to see. 62% is still just right around average. And so option traders, again, pricing around that 5.5% price movement. And so the next thing that we need to do after we do this really thorough due diligence, we need to always check out the Investingcom's article that they post every Sunday morning. Is the top 5 things to watch this week, because we want to confirm a lot of things that we went over, but also to see if there's anything that we may have missed. So so it's set to be a busy week in the markets, despite being a short one, with the United States inflation data due at the first quarter earnings season getting underway. Inflation could hit fresh highs. While bank earnings are expected to decline, the ECB is to meet as it grapples with the record high Eurozone inflation and economic uncertainty stemming from the war in Ukraine. Central bank meetings in both Canada and New Zealand this week will also underline the worldwide effect to contain inflation. Here's what we need to know to start our week. Number 1, the United States CPI report, which is something that we had went over, the inflation. So the February's consumer price inflation reading of 7.9% was the largest annual increase in 40 years. And the United States data on Wednesday is expected to show that the CPI rose by an annualized 8.5% in March, as the war in Ukraine sent commodity prices sky high. So a strong inflation reading would bolster the case for more aggressive rate hikes by the Federal Reserve, which rate hikes provides bearish characteristics, likely adding to investor concerns that tighter monetary policy could act as a drag on the economy. The Fed hiked rates by 1/4 percentage point in March, and last week's minutes from the meeting indicated that more substantial rate hikes and a balance sheet runoff are probably on the cards in the coming months as policymakers try to prevent high inflation from becoming entrenched. Number 2 is the economic data. Aside from the CPI numbers, the United States is set to release data on the producer price inflation on Wednesday, which is another thing that we had talked about. The latest figures on the initial jobless claims, which are the unemployment reports, are due for the release on Thursday, along with the data on the retail sales and consumer sentiment. The figures on the industrial production and the Empire State Manufacturing Index will be released on Friday, which will be the Good Friday holiday. Several Fed policymakers are also scheduled to speak during the week. Many governors look like will be speaking on Monday. So that could provide a minor amount of volatility, but not a whole lot. So we got more delivering things on Tuesday and Thursday. Number 3, bank earnings. And so big U.S. banks will kick off the first quarter earnings release this week, and analysts are expecting financial sector earnings to decline from a year ago. Investment bank revenues are taking a hit in the wake of Russia's invasion of Ukraine, while some banks are making provisions for losses related to Russia, such as JP Morgan. That'll be reported on Wednesday, while Goldman Sachs and Morgan Stanley, Citigroup, and Wells Fargo will be on Thursday. Bank shares have performed badly so far this year, losing 11% against the S&P 500's 6% decline. Bank executives will likely be pressed for their view on whether the United States economy can continue to grow against the background of the economic fallout from the war in Ukraine and more aggressive Federal Reserve. Number 4 is the ECB. The ECB is to hold its latest policy setting meeting on Thursday, while the euro area inflation is running at a record high of around 7.5%, fueled in large part of accelerating energy costs. Policymakers are reluctant to tighten policy amid uncertainty over the impact of the war in Ukraine on the Balk's economy. But with inflation still showing no signs of peaking, calls for rate hikes by the more hawkish members of the ECB's governing council may become more difficult to ignore. Market watchers are increasingly expect the ECB to raise interest rates this year. In March, the central bank announced a reduction in its bond buying stimulus program that would see the program end in September. At the same time, it is said an interest rate increase could follow sometime after the end of the bond purchase. Number 5, inflation fight. Central banks in both Canada and New Zealand are both set to meet on Wednesday, with the market watchers expecting officials at both banks to deliver their largest rate hikes in 20 years amid soaring inflation worldwide. According to the data compiled by Reuters, markets are pricing in a 90% plus chance of a 0.5% point rate hike from the Reserve Bank of New Zealand, and a better than 80% likelihood of the Bank of Canada does the same. With the Canadian inflation seen above target until 2024, another 0.5% point hike may come around June. New Zealand delivered a 0.25% rate hike in February, its third, and flagged the possibility of a bigger rise or rises ahead. So that's that for that. Let's take a look at some activity on options really fast. And so I use a website called barchart.com to pull a lot of great options information in a very user-friendly interface. So if I click on options, we could click on most active options. You can do this on your website, or you have to do this on the website. You can do this on your mobile phone, tablet, or using your desktop, laptop, or whatever. Most active options. Now, this information updates when the stock market is open. About every 15 minutes, it updates, but the prices will update by the second. But since we're looking at this on a Sunday when the stock market is closed, this information is basically right at close on last Friday. So Apple is on the top of this list like normal. It holds the highest options volume. Now, volume is today's buying or the current day's buying and selling activity. So it's a mixture between buying and selling of calls and puts. But look at this. It sorts it out, letting you know that out of this amount of volume, it's 56% are calls and 44% are puts. So you can kind of see so for example, the pro traders, we have a saying, follow the money. Rather than just, listening to someone, asking someone on Facebook or someone about what their opinion is or what they're doing, following the money can provide a lot of different bits of information, but this is one of the clues letting you know where they're putting their money in, which stock, or and are they betting the stock's going to go up? Or are they betting it's going to go down? Like, for example, this one here on the bottom, SST, System 1 Incorporated. I have no idea what this is. And normally when you see something when you're looking at this regularly, you'll see some regulars, things that are normally on here. But you'll also notice things that aren't normally on here, like this one. System 1 is down 13% last Friday for some reason. But for some reason, out of this amount of volume, unusual volume, almost 80% of them are betting that this stock's going to bounce back up, probably on Monday. And so you don't always have to buy calls on it. You can use this to buy shares, and so you can always buy shares if they're betting that the stock's going to go up, especially 80%. It most likely probably will. And so there's just a lot of great information that you can collect off of this. And so one of the reasons why Apple's regularly on the top is because it's the most favorable stock and stock option to day trade. It doesn't move very much. It moves like 1%, 2%, maybe 3% at most. But in the stock options world, 1% could be 20%, or it could be 40% movement in the options world. Apple, its graph is very predictable. It's very mellow. It moves where we can identify our buying and selling signals very, very easy. So it's a good one to practice if you're just now learning. Apple is a very good one to learn to trade off of your buying and selling signals. And so, but right now, they could be straddling. Straddling is where you buy both a call and a put on the same one, especially if you see 50-50. They're not sure what Monday might be like because of the invasion or bad news. So they may be playing it safe. They're buying both calls and puts because if Apple, let's say, moves like 3%, you could lose maybe 60% on one, but maybe you gained 120% on the other. And so that could be big movements on that. So Tesla's another favorable stock option that people trade because it is very volatile. Tesla can move 3, 4, 5, 6%. It can also provide some huge swings in the options world. And so a lot of people will straddle that one or just day trade it. However, Apple has the least amount of time decay than really most other stock options. Tesla has a good amount of time depreciation because, most people, Tesla's a very expensive stock option. So a lot of people tend to buy out of the money, which is far away from the share price, which can provide a massive amount of time decay. So Apple is a little more popular because it doesn't have as much time decay compared to most other stock options. So Nvidia is third place on the list. They have a good amount of activity. Nvidia is usually on the list. They're normally in the bottom or middle, but they made it third place on Friday, and as well as Nvidia. So both of these are semiconductor companies, and they're on the top of the list. So that definitely means something. And so, but AMD has around almost 65% call ratio versus 35% puts. And so, and then AMC, which has kind of been trickling on the list lately, it sometimes can be on the list, but just depends on the on its activity, which we'll get into something here really shortly. But I've definitely detected activity on that lately. And so everything's kind of, well, so here's another one. AT&T, which is priced at $24, was up last Friday when most things were down. We have almost 82% people are buying this that absolutely believe that AT&T is going to go up for some reason. And so that's just a lot of great information that we can utilize. We got Twitter on here, Bank of America. Like I said, out of all the banks, though, the Bank of America seems to provide the most activity. Going into bank season, this is the only bank that is on here and usually holds the most volume in things. And I believe this bank is probably one of the least expensive stocks out of most of them. And look, when most stocks are down, it had almost 71% call ratio, betting that Bank of America is going to keep going up. So so definitely keep Bank of America on your watch list if you are a long-term or a short-term investor. So another area we can go on the website after clicking options, we can then go to option volume leaders. After you've kind of looked at the overall options or the systems options of everything, we can now see what are the most active individual calls and puts. Now, it's important when we're looking at this on a Friday or Saturday or Sunday to make sure that we're looking at the DTE, which is the number of days until that particular option expires. Because if it says 0, the expiration date has passed, it is no longer invalid and it'll disappear. So we have to kind of wipe that out of our site here and not pay attention to it. So that means that the next one is the JBLU. It was really the most active stock option with the highest volume. So again, volume is the current trading days buying and selling activity. And so 75,000 in volume. And look at this, open interest, it was just under 6,000. If you're not sure what open interest is, because you don't see that in regular stocks or shares, open interest is kind of an accumulation of previous volume, because volume resets itself every day. It goes back to zero in the beginning of the day, then it accumulates throughout the day, and then the next day it goes back to zero. Well, with regular stocks and shares, you have a you have the average volume, specs, but in the options world, you have the open interest, which is an accumulation of interest prior from the current trading day. So going into Monday, basically these two numbers will merge into themselves, creating like an 80,000 in open interest, and the volume will start over. But what this is telling us, though, the previous open interest was just under 6,000. Now all of a sudden the volume is 75,000. That's saying that this is like almost over 90% buying activity. This is just pure buying activity. And with this stock being just under $12 and with a strike price of $15 that expires in May 20th, in approximately 42 days, that could be a very decent gain on your part. Or you can also buy as a share, $12, and the $15 is kind of like your target, which is your strike price. That's your target. So going from 12 to 15, that could be, like a 20% gain or 25% gain or whatever on if you're just holding it as a share. And so, but it can also keep going up. But for some, and this is also something that is never on this list. So for some reason, it's on this list now. And so we have to put this on our watch list. We got to do some due diligence to figure out what is making it the #1 stock option on this list, because they're showing a tremendous amount of highly unusual activity on it, because these two numbers are significantly less, just like these other ones, these Ford ones here. And so, and we can keep going down the list. We have AT&T that's here. We have this information, which looks all right, nothing too unusual. However, we do have Apple here with that is currently active in the in this area here. Apple is currently right around $170 a share. We have two good strike prices. We have 175 and a $172.50 strike prices that expired this Friday on the 14th. Both of them have a decent amount of open interest and volume that exceeds over the open interest, which also helps provide clues whether Monday is going to be bullish or bearish or not. So this is one of these clues. Since Apple really dominates the stock option world, these types of investors usually will kind of know what Mondays is going to be like, during opening. And so this is really good. Even though we do have a put right down here, we also have a $180 call strike price. So out of the 4, we have 3 calls, 1 put. So that's a 75% calls, 25% puts. So this could just be maybe some people just wanting to, straddle just in case, just a little insurance just in case. But the overall calls will exceed over the puts, still, putting you ahead. And so Tesla's right here, not looking good. We have a Tesla, which is currently $1,025. Well, actually, this is expired, so that doesn't matter. So disregard that one. Then we have Ford. Ford right now is right around $15 a share. There was a little bit of some manipulation news last week. We have I think some hedge fund companies or news media, whatever, saying that they're trying to downgrade Ford, saying, oh, Ford down, it should be down 25%. Well, that would put Ford around what, $11 to $12 when they had mentioned that. So I'm not seeing very many put activity below $15. We're seeing, Ford around $15, $16 right there. We have another $15 put and $16 put. So yeah, we're just not seeing anything less than that. So as we're in that transitional period from going from our bearish season to bullish season, you know, there's going to be at some point in time within this quarter where it's just going to really, you know, switch, and the bullish season is really going to kick into gear. And so, you know, Ford is working on developing more factories, just like Elon Musk has been doing. That has been helping out his stock tremendously. Ford is really copying Elon Musk and Tesla in several different ways. And so this is really going to help Ford Motor Company out a lot. There's been a lot of things I'm going to show you next. It's going to show a lot of long-term stocks that's going to show Ford is at like $20, $25, $30 call strike prices, probably like right when the year is over. So Ford is going to provide some really good gains here this year. So again, that was stock option volume leaders under the options area, and it automatically defaults to volume. Now, if we click on open interest, let's take a look at the entire system's stock options sorted out by open interest. So if I click on it, it's going to sort it out at first with what we see on the page, because barchart.com wants you to pay for, you know, some of this stuff. And so, but there's a glitch. There's something we can do. All we can do after we click open interest, it refreshes the information on that page. Click the refresh button on your browser. You click refresh, and now all of a sudden it refreshes the entire system, and now you can see the open interest has completely changed. It is much higher. Open interest, look at these. This is huge. We're almost at, you know, 180,000 in open interest. And so what we're seeing here is stock options that are much later in the future. We're seeing like a year away, almost 2 years away, or maybe a month, or you know, a couple months away. And so we have Ford Motor Company right here, which is currently at $15. We have a call strike price at $20 that expires next year in January 20th, approximately around 287 days. So again, follow the money. You know, people, you know, or buy on rumors, sell on news. There's another thing. And so there's another Ford call strike price here at $25. And so even if you buy it as a share, I can't recall if Ford's gotten back to paying dividends, but if they are still paying dividends, not only are you holding something that's appreciating, but they're going to pay you a dividend every 3 months. We just have to see if they had reinstated that, because during the shutdown they had temporarily suspended that. Teva, which I believe is a pharmaceutical company, is second on the list, the second highest open interest at 160,000, and so they're currently at $10.40 with a call strike price at $12. That also expires almost a year from now. We have Open, which is currently at around $7. We have a $12 call strike price that expires in a year from now. So that's really good. Look at American Airlines though. American Airlines, which is currently at $16.59, has a put strike price at $12. So that is not good, especially that a lot of investors are betting that the stock is going to keep going down between now and then. PBR, which is currently right around the money right now. We have ET, which is already in the money. We have T for the AT&T, which is currently at $24.14. We have a $30 call strike price that expires almost a year from now. EQT, which is almost at the money. We have another Ford call. American Airlines, there's another put for American Airlines at $13. So that's due to expire in approximately 70 days, around June 17th. Now take a look at this. AMC, this is huge. AMC, which is currently didn't mean to click on that. AMC, which is currently at $18.24. Take a look at this call strike price, $145, that expires approximately 98 days, which would be around July 15th. So we got to put some of the pieces of the clues together. What just happened recently? GameStop. What did GameStop just reveal. They just revealed that they want to do a share vote on a stock split. What normally follows GameStop when something happens? AMC. So if they do this vote and they pass, they do the stock split. The stock splits are the same scenario every single time. We had the stock splits for Apple way back when, Tesla, and so on and whatnot, and we got more coming. We got Amazon that's going to be doing their stock split. We have, I think Tesla is going to do another vote to do another stock split. This is very important. Listen up, very when a company announces they're going to do a split, they're going to release the date of when that's going to happen. Between now and then, the stock will trend up. We don't know how much. It could be substantial. It could be 10%, it could be 50%, it could be 100%. We don't always know, but it always tends to go up. The day that it splits, it goes down. Remember, buy on news buy on rumor, sell on news. When the stock splits, the stock price or the stock value plunges, but usually it goes down for the next 2 weeks about 20%. So, for example, Tesla, when they released that they were going to do a split, I think Tesla was like around $1,500 or something like that at that time. It had quickly surged for the between when they revealed the date of when it was going to be split and between that and the date that it got split, the stock had surged between like $1,500 to $2,500. I mean, it was huge. It was a huge gain. It was substantial. When it split 5 ways. Went from $2,500 it went from $2,500 to $500 a piece. That's 5 ways. It went from $500 to $400. That's 20%. And Apple did the same thing. It did it went down 20% for about 2 weeks, and then it starts to gradually kind of recover, and it starts to do its own thing. So just know that if GameStop does approve the split, we're going to see a massive surges between GameStop and AMC, and that's where, in a very short period of time, and that's where I think this is one of these clues that we're seeing that's starting to accumulate. We're not seeing a huge amount of volume just yet, at least for this particular date, maybe some other dates, but the open interest is definitely accumulating. So like they're waiting to see if it's going to get voted in or not. And so, yeah, this is a huge gap distance between that's huge. Even if at $100, that's like a 600% gain, and going from that's like what, 1,000% gain. And so we definitely have to keep a very close eye on AMC. There's some other areas within the options area on barchart.com. You can go to unusual options activity, and it'll try to find some pretty big distances between the volume and open interest. I mean, look at that. We have like, but make sure that they're all active and not expired, like the AMD one here on the bottom. We want to try to find things that have a big difference, like the 22,000 versus 600. These open interest was nothing. They had no activity, and now all of a sudden they have some kind of activity. Like for example, here's Tilray. We're going. Okay, let's talk about cannabis for a little bit, because Tilray is a cannabis stock. So recently, our government had announced they were going to do a vote to see if we should legalize recreational cannabis. It's going to happen. It's just a matter of, it's not a matter of if, but when it's going to happen. Canada has already legalized recreational cannabis years ago. Mexico did the same thing. The United States is sandwiched in between 2 countries with legal recreational cannabis. And so the United States is losing out on a tremendous amount of revenue by not going on board with this. They should have done this a long time ago. But this is how the cannabis play is going to play out. So the next vote is through the Senate or whatever. So we got a lot more, the government and politicians have a lot more work to do before it's completely approved. However, if once it's approved fully, they're going to set a date of when, you know, it'll be legalized. Typically that'll be in the beginning of the year, you know, so maybe January next year. If they do all this, they said it's all said and done, that means that cannabis stocks are going to surge like crazy between now and then. As soon as they legalize cannabis nationwide, the cannabis market is going to flood itself, and the cannabis stocks are going to plunge, and they're going to plunge, and they're going to plunge right back at penny stocks. Tilray used to be right around $150 a share when Canada hadn't yet legalized recreational cannabis yet. And as soon as they legalized it, that's what exactly happened. The farmers and the stores and whatnot, they were flooding the market. They were getting too much. They were growing too much. They're selling too much. They're competing too much. They had to drop their prices. They're struggling. It wasn't a very profitable business for each individual. It's very profitable for the government, but it made it, you know, it became less profitable for the rest of the industry though. So, but the same scenario is going to play out here. But like I said, it's not a matter of if, but when. It's going to happen. But this is the play that the strategy that we have to use for this, because it's going to play out exactly the way that I said it. So, but it's still good to see other unusual activity here, because like I said, it may provide you information to look to a particular stock. Like here's the Robinhood stock. You know, for some reason there's some unusual activity on this. We did see some individuals, some of you guys, some of our members of our group that mentioned information about the Robinhood stock. You know, they're getting, you know, they're pretty low right now, and Robinhood is getting ready to do, you know, some other, you know, cool things and whatnot. And people really want them to add, you know, Shiba and other cryptocurrencies. They've been using the same 7 cryptocurrencies for a while, but Robinhood is going to if able to get different results, you have to try something different. Otherwise, you're going to get the same results if you're doing the same thing. So that goes for any individual or for any other company. So I think there's some things in the pipeline for this company, and so that's where we're starting to see some members are starting to question this stock, and we're starting to see some people investing into it. And so, but there's just a lot of great information about Wells Fargo, like we're talking about bank season, you know, coming up, Carnival Cruise Line. We've been seeing a lot of ads on Facebook on that. And however, when do people go on Carnival cruise rides? During the spring and the summertime. What's the season now? It's springtime. So, but we are seeing, look at calls and puts. We may be seeing a lot of straddling activity, especially with the same amount of open interest and same amount of volume. So obviously we're detecting straddling activity when there is an area on the side of the options area of our barchart.com website that we want to click on. So we have straddle and strangle. So both of them are the same concept. You're betting one goes up and you're betting the other goes down. You're buying both calls and puts. But the difference between a straddle and a strangle is that the straddle is the same strike price, whereas strangle are different strike prices. Maybe you're going to do a strangle where the strike price is like your call is $5 over the share price and your put is $5 below the share price. But it's the same concept. But when we want to look at all 4 of these, you have your short-term and your long-term options. This is pulling out, unusual or activity on straddling overall. But we want to find unusual activity, and how we can identify that is by looking at multiple stocks of the same stock. So, for example, we see Apple. We see 1, 2, 3, 4. There's 5 apples on the first page right here. That normally doesn't happen. So, but we've mentioned straddling a little bit. We've mentioned some activity, looking into the options activity that we were detecting a lot of that. So Apple is a really, really good one, especially to hold throughout the weekend. But again, we want to look for more of the same one. So we see SST, we have one there, two there, and that's it. So we have two of those. Any Tilrays, we got one, so just one Tilray. BRCC, I don't see any more of those. Apple, AT&T, Apple, AMC, there's two AMCs. So again, we're starting to see some activity, straddling activity on Apple and AMC. Any others? No, I think that's about it. So we'll go to the next one. So Apple and AMC on that one. So next one here, let's see, any of the same ones. You just start from the top, work your way down. Costco, just the one. JP Morgan has the earnings coming up. Path, I don't see any other. GE, no. Nike, DraftKings, AMD. It looks like just one of each. Okay, so we'll go to the next one. We'll go to the short strangle. So far, we have multiple of the AMC and the Apple. Going into the third page, now we have AMD. Lots of straddling on AMD. AMD's pretty low right now. And so it's time for AMD to come up. And so AMD is, provides some big movements in the options world, even from a little movement in the shares world. And so, but we got 1, 2, 3, 4, 5, 6, 7, 8 AMDs right here. Wow, that really dominates so far all of the straddling activities. We'll keep going down. We have Guild, Tilray. We have two Tilrays here. We had one on the other page. So we are starting to see some straddling activity on Tilray. Let's see any others. We see another Robinhood, AMC. Okay, so go down, do the long strangle. So far we have the AMC, AMD, Apple. And then going down here, last but not least, PBR. That's the only one there. DB, any others? No. GE, MU. That's the another microchip company. We have two of them. Okay, so going into this week, we do know that the Taiwan Semiconductor company is scheduled to release their earnings. So when they release that could affect other semiconductor companies as well. So that could also affect the I think it's micro semiconductor, Micron. I think is what this is, Micron. So we got 1, 2, and so we have just the two there. So we are seeing some, of other related, segments to the semiconductor or the Taiwan Semiconductor right here. So looks like people may be playing that one as well. So we AT&T, right? Tesla is on here. We got 1 and 2 and 3. So Tesla is definitely showing some unusual straddling activity going into Monday. We have Walmart there. Don't see any others. So it looks like that's about it. So we have your Apple, AMD, AMC, and Tesla that dominate the straddling activity. So if you ever wanted to see more activity on a particular stock option, we can always utilize the NASDAQ website for that. So NASDAQ website here, and you can always Google it too. You go to type in NASDAQ most active Apple or APPL or AAPL of most active options for NASDAQ. It'll take you right to this page. That way you can see the most active individual calls and most active individual puts for that particular stock option. That way you can see what are people buying. You have your volume, you have your open interest. Unfortunately, the NASDAQ updated their website some time ago. They used to have the expiration date right on there. Now you have to actually click on it to determine what the expiration date is. So you have to click on it. You can see April 8th. So obviously this particular one is expired, but you'll have to kind of do that. And you can, once you have the link, you can always bookmark it. You can change the little ticker code in the URL address to any other ticker. So we'll pull up Ford, since that's something we've been talking about. We have Ford right here as most active calls and puts right here. But again, you just want to make sure that you're not really looking at one that's expired. And so very, very good, useful, highly intelligent information. Hopefully this all makes sense. If it doesn't, feel free to let me know. If you guys have any questions, any comments, or so far everything makes sense, ready to go into next week, getting ready to kill it, and make a lot of gains. You feel free to unmute if you want to voice talk, or you can chat in our Zoom meeting chat room. I'll leave it here for a minute or two in case you need to do that. No questions, no comments. Everything makes sense. That's good.
Hey, Mr. Carlos, can you hear me?
Yeah, I can hear you.
Okay, so I have a question. When you do, like, when you play options on the earnings, so what expiry day you choose? Like, what makes sense, like, to choose the expiry date? End of the week or next week, or like, how should it go?
So expiration dates. So expiration dates really depend on your style in investing and in trading. If you're more of a longer term, options trader, you like with a lot of these ones that we were looking at with the highest open interest, those may be the ones you want, because the longer your expiration date, the less volatile that it's going to be. And so and some investors might like that because maybe they're not as active. Maybe they're not able to look at or watch the stock market like others may, because maybe your job or lifestyle is maybe interfering with that. And so that's where you'll want to probably utilize a longer expiration date. However, and so like this, like now that I'm here, we have our longer expiration dates. So like if you wanted to, buy a $20 forward strike price that would expire, that gives you plenty of time. You don't have to watch the stock market. You'd sell, when it gets to, a good point, and you'll make a good substantial money. So it's a very low risk, but also kind of a low reward too. But if you're going to, like, say, straddle, we're going to straddle both calls and puts, then you're going to want the soonest expiration date, because you want more volatility. You want one stock option to gain like 500%, which would then result in the other stock option to maybe lose 50% or 100% or whatever. And so you want volatility when it comes to stock options, or maybe something is going to go in your favor. Like, for example, what we were talking about, the Taiwan Semiconductor has an 80% expecting an earnings beat. And so if a stock option has an 80% expecting earnings beat, that makes it a kind of a lower risk and a higher reward. And so with something like that, you can either choose the soonest expiration date for the most volatility, or if you want to try to minimize the risk just in case, because you still have 20% odds that it could go against you. And so you could extend the expiration date a little further, maybe 1 or 2 weeks. The further you go out, though, the more valuable or the more expensive that the stock option is going to be. So it also kind of determines on your budget, because for a strike price, you don't really want to go too far away from the share price, unless the expiration date is a lot further away. And that's where you're seeing like if we go to the options volume leaders, a lot of the strike prices are right around the share price, which they call the money, or in the money. So like AT&T is $24.14. We have a strike price of $24. That is in the money already. But when you're dealing with a short term, that's what you want, because the further away you are out of the money, the more time decay and time depreciation that your stock option is going to suffer. But but the further away the expiration date is, the less time decay that you're going to experience. So then it makes it okay to maybe get a one that's out of the money. But just know the money is really more in a shorter term. Getting in and getting out, securing your profits, and repeating the process over and over again. But it just really depends on your style in investing and trading. So hopefully that makes sense.
Absolutely. Thank you so much.
Yeah. Any other questions? There's some chatting in the chat room here, but yeah, if anybody has any verbal questions, go ahead. Otherwise, I'm going to read your messages here. Best way to fight time decay. Basically, that's what we just were talking about. Stay in the money, right at the money, or just maybe a little above it. Just don't go far away from the the share price, and that will. But also, some stocks have different time decay levels than others. Apple has one of the least amount of time depreciations than any other stock. Tesla is, it's a little more aggressive, or others. Ford is okay. Ford is, it got a good amount of a low amount of time depreciation. A lot of Chinese stocks options has some pretty high time decay. So avoiding time decay or severe time decay also determines on which ones that you apply it. Now, also, if you're looking at ones with a very low amount of option or volume or open interest, that can also provide a high time decay level. So you want to find something that has some pretty good activity, because that'll help provide value there, because people are just naturally pumping it up. They're keeping the value on. So volume is also another key to maintaining time depreciation. Another person says, buy your options at close to the money as possible. Yeah, that's right. Close the money means close. Yeah, okay, makes sense. Or okay, understand the strategy and all those options for 2023 way outside the money. So Roberto, yes, I'm trying to understand the strategy and all those options for 2023 way outside the money. So trying to. Yeah, and so hopefully what we've been able to provide makes a lot more sense, since you mentioned that. Low cost people with too much money taking, yeah, and that's true. So going way out of the money, it's like they know that it's going to reach that. And because we did this before a year ago, Ford was around $9 a share, and a lot of people had $20 strike prices at the end of the year. Well, that was this year, and so Ford had reached $25. And before it started to kind of trickle down to $20 and to $15, it's definitely going to reach, back up there, and we're seeing it. And so it definitely, as Joe says, it does provide a low cost because it's way out of the money. But investors, there's a lot of volume, there's a lot of open interest overall. That these investors, these are pretty wise, they know what they're doing. These are, older investors. They're in their 40s, 50s, 60s, 70s, 80s, whatever, and they know. And a lot of them are insider trading. They work for Ford and whatnot. They know what's going to happen, and so they buy it low now, and they hold on to it because they know that it's going to reach that. And so, however, Ford Motor Company has a lot of things in the pipeline. They're going to be creating new, like, little sub companies or whatever. They're creating new factories, new battery, developing recycling centers, and there's just so much that they're doing. That it is definitely it's a growing company. If you have a growing company, their stock is also going to grow. And so because Joe says it's a low cost, by the time it gets from $15 to $20 or $25 again, those stock options are going to be worth a lot. The gains, especially getting into them now and then, you're going to gain like 1,000% or even more. And so that's huge. When it's kind of like you just buy it now, just wait, sit on it, and just sell it in less than a year from now, or during Christmas time. There's your Christmas bonus. And so that's one of the reasons why, yeah, definitely low cost. People with too much money taking. Well, it's a low risk, really, because it's almost an inevitable. It's going to happen. And so. Where young traders usually like to get in and out, and that's where we see things with a lot of volume. you know, because that's where we see a lot of younger traders. Traders are in their 20s, 30s, 40s, you know, but like I said, usually people that are a little more relaxed, those are the ones that are going to be focusing more on the ones with the open interest. So hopefully that makes sense. Any other questions? Everything makes sense? All right, well, I will always be available 24/7. If you guys ever have any questions or comments, you can feel free to message me in our group chat rooms. That way we can talk about it. And yeah, anything else you guys can think of or see, definitely let us know. Thank you guys very much. Let's make a lot of money this week, but also stay safe, make good choices, and we'll see you next week. Thank you guys.